Okay.
Excellent. So welcome everyone to another Fintech Saudi Summer Session. We're in week 6 this week, and we're going to be talking about insurance and InsurTech. We're really pleased to have Rami Yehhya with us today. Rami is the host and producer of Tamkeen, which is an innovation insurance podcast. So we're really pleased to have you, Rami, with us today to go through everything related to insurance and InsurTech. Just a couple of housekeeping. So we are going to, as ever, we're going to be taking questions. So if you have any questions, please add them in the Q&A, and we'll try and get through as many of the questions at the end of the session as possible. This session will be recorded, and the recording will be shared with you in the Google Sheet with all the other recordings, and we'll put the link in the chat box as well. And the other thing to note is straight after this session, in fact, 30 minutes after this session, so from 7 to 8 o'clock, we will be holding a Introduction to the Fintech Internship webinar. We'll put the registration link in the chat for you. So you're more than welcome. If you're applying for the Fintech Internship this year, then it's certainly something that you should definitely look at attending, and we'll give you loads of information about how to apply and how to make your application stand out. So that's enough from me. Thank you very much again. Rami, over to you to start the presentation.
Thank you very much, Sagar. Hello, everyone. Good morning. Actually, good evening. I'm in LA. It's morning today here, so hope everyone is doing well. I would like to apologize ahead of time for the weather has been crazy, so there's thunder outside. So maybe I hope we won't be disturbed much during the session. Here we go. So my name is Rami Yehhya. I'm an insurance business and professional and entrepreneur as well. I have more than 17 years of experience in the field. It gives me pleasure to be again with Fintech Saudi, and we hope we're gonna have an interesting session and very informative for all of us. So let's start. So today's session is, as you all know, is about insurance and InsurTech. So just a brief summary of the today's session. We're gonna start by defining insurance. What's insurance? How did it evolve through the years? How did it start at the first place? Did it start in the first place? And then after that, we're gonna talk about the importance of insurance. We're gonna talk as well about the benefit of insurance, leading all the way to the disruption that came with technology, and to talk about what's known as InsurTech nowadays. And then I'm going to give you some resources. So let's start. So what's insurance? Insurance is a means to provide financial protection from risk. So insurance, the word risk, to start with, is derived from the Italian word risicare. It implies the doubt about the future, as well as the fact that the outcome may put us in a worse position or situation than we are at the moment. Traditionally, risk was defined as the uncertainty of occurrence of a certain event that may result in loss. And when we talk about risk, we talk about two main factors of it. We talk about frequency and we talk about severity of the risk. And these are the two essential elements to price an insurance or to evaluate or assess the risk. Uncertainty, in turn, is associated with probability. So this is what actually do in insurance. They assess the probability of a certain event to occur. And this is how they price insurance. This is how they calculate reserves required for studying certain risks. In a world of stillness, there's no risk, because definitely there's no change. And as the Greek philosopher Heraclitus once said, the only thing that is constant is change. So since change is unavoidable, risk is always there, and thus the continuous need for insurance. So in a simple definition for insurance, insurance is a contractual relationship between two parties to transfer the risk from one party, which is called the policyholder or the insured, to another party, which is the insurance provider, or as we know, the insurer or insurance company. And insurance helps people and companies to protect themselves from natural disaster, from car accidents, illness, life uncertainties in general. The validity of the insurance contract will be validated in the future. So it's a promise. So what the insurance company is selling you is a promise that in case any uncertainty or any loss happen in the future, they're gonna compensate you. We're gonna talk a bit more about this one a bit later. So as we said, insurance is a measure that one takes against risk, which can happen every time. So let's go over the history of insurance and how it started. Insurance is a very old concept that appeared from ancient times. It started in various forms across different countries, and the word at the early stages, namely, was related to bottomry contract that happened in Babylon. Babylon is Iraq today. It appeared in Greece and among the Indus. And what are bottomry contracts mainly? They are a kind of like maritime contract, whereby under a bottomry contract, loans were granted to merchants who would like to sail in the seas to make shipments. And then in case of the shipment was lost for any reason at sea, then the loan did not have to be repaid. And this was considered to be a form of insurance. Other forms of insurance were also common in Rome. There were burial societies that paid funeral costs to their member out of monthly fee. The Great Fire in London was the main event that gave impetus to fire insurance. That was in 1666, and at the time it devoured more than 13,000 houses. The devastating effect of the fire converted the development of insurance from a matter of convenience to one of urgency. And this is usually what happened with us in life. We won't consider something as urgent unless something happened to make it urgent. So the first insurance company was to be established in London was a fire insurance company. It was established by economist Nicholas Babin in 1681. And it was called the Insurance Office for Houses. At the beginning, 5,000 homes were insured by this insurance office. A number of insurance companies were started later on after that in England. And we cannot discuss the early development of insurance in Europe without talking about Lloyd's of London, the international insurance market that we all know today. So how it began? It began in the 17th century as a coffee house. It was owned by Edward Lloyd and was patronized by merchants, bankers, insurance underwriters. And it becomes gradually recognized as the most likely place to find underwriters for marine insurance. So Edward had a coffee shop, and then it used to gather all kinds of merchants and sailors. And what he did to his customer is that he started providing them with shipping information that he gathered from the docks and other resources. This eventually grew into the publication Lloyd's List, which is still in existence today. Lloyd's was recognized in 1769 as a formal group of underwriters accepting marine risk. And the word underwriter is said to have derived from the practice of having each risk taker write his name under the total amount of risk that he was willing to accept at specified premium. So this is how the word underwriter that we use today in insurance was derived. Talking about insurance in our region, insurance or some forms of insurance and mutual health schemes have been practiced by the tribal Arabs since the pre-Islamic history or period. In pre-Islamic times, the obligation to pay diya, or what is known at the time as blood money, rested on parental relatives of the murderers, who had to pay blood money to the heirs of the murdered member of the other tribe. And at the time, if this has not been done, then, or if the murderer or his family could not pay the diya, the relatives of the victim were entitled to vengeance. Later on with Islam, the legitimacy of diya was confirmed, recognizing its important role in stopping inter-tribal conflict and uniting all tribes and people into a single Muslim community. Some specific sums were established at the time as a compensation for various injuries. And this is what is known today in insurance as like the partial disability, partial or total disability. So the importance of insurance. So let's understand what role insurance plays in today's society, in today's everyone's life, and how it benefits everyone. So as we said previously, insurance provides financial support and reduced uncertainties in business and in human life. So insurance is an important financial tool, as we said. It can help you live life with fewer worries, knowing that you receive the financial assistance after a disaster or an accident, which help us recover faster. When it comes to life insurance, for example, this could mean that a family doesn't have to move out of the house in case the breadwinner is no longer there, or that their kids can afford to go to college. For auto insurance, for example, it could mean that you can have an extra cash in hand to help you pay for repairs, for example, or the replacement vehicle after an accident. So in overall, insurance can keep us or keep life on track as much as possible after something bad derails it. And we're talking here about the financial aspect of any loss. We're not talking about the emotional aspect or any other aspect associated with the loss usually. Sorry. So the first element is safety and security. So insurance provides financial support and reduce uncertainty in business as well as in human being life. Life insurance encourages good habits as well. So it develops a habit of saving money by paying premium, and then part of that premium in some saving plans is dedicated to or allocated to investment. Thus, life insurance encourages savings, which is a good financial habit. Another habit that could be encouraged by insurance is like in health insurance. You know, today's with wearables that we are all having, everyone has an iWatch or another smartwatch now that can record your activity, your movements, everything. And many of the insurance companies today or products rely on those like data generated by those wearables to assess the risk from their side and to give you incentives. Same goes for telematics, for example. You'll be rewarded. We're going to talk a bit about telematics in a bit later. So telematics insurance will award you for good driving. And this is encouraging you to go for some good habits. The third element is the financial resources. So insurance generates financial resources by collecting premium. They generate funds, and these funds are invested in government security and stocks. So it's a means to generate, in a way, financial resources. The fourth pillar or element is the social security. So on one hand, for example, if we take medical insurance or health insurance as an example, it's considered an essential mean in managing the risk in health and provide a safety net for social security for the community. Another benefit could be is like the generation of of employment opportunities, and that is done either by the direct employment opportunities in the insurance sector, or by the funds collected and invested later on in the economy, which is increase the employment opportunity in a certain economy. And the last one, which is related as well to what we just mentioned, is the economic growth. So insurance generates significant impact on the economy by mobilizing domestic savings, and it turns accumulated capital into productive investment. So since now we understood the importance of insurance, let's see how it works. One important concept of insurance is the law of large number. So how does it work? When you buy insurance, you make payment to the company, and these payments are called premiums or contributions. In exchange, you are covered from certain risks. So the company agrees to pay you for the loss if they occur. They promise to pay you if they occur. And on that basis, the insurance is based on the idea that spreading the risk of a loss, such as fire, theft, accident, or any other risks, among many people, make the risk lower for all. And this is what we call in insurance the risk pooling. So, for example, the insurance company has many clients. They all pay premiums, but definitely not every client will have a loss at the same time. So when loss happens, they may get insurance money to pay for the loss. An insurance company uses the law of large number to lessen their own risk or loss by pooling large enough number of people together in an insured group. Sorry. So in short and simple, the law of large number is used by insurance company to predict risk better and their exposure in this case. So the law of large number says that the bigger the amount of people in the pool, the better the approximation you can come up with. And as you approximate better your exposure to risk as an insurance company, the better you'll be able to definitely cater for those costs and then fulfill your promise to your customer. And on that basis, insurance companies, definitely they are for-profit enterprises. They have to create an internal business model that collects more cash than it pays out to the customers, like any other business. So by doing this, they build their business model on two twin pillars. They have the underwriting part and the investment part. The underwriting, so what they do, they charge premium in exchange of insurance coverage. Then they invest those premiums into other interest-generating assets. Like all private businesses, insurance companies try to market effectively and minimize administrative costs. So underwriting revenues come from the cash collected, as we said, on insurance policy premium, minus money paid out in claims and other costs associated with the operations of the business. So since we talked about underwriting, which is the core, at the core of the business model of insurance companies, let's define what's underwriting. So insurance underwriting is how an insurance company evaluates its risk. So they need to have the underwriting for two things. First of all, to see whether accepting a certain risk is profitable for them and they can accommodate it. And the other one is to know how much they should charge for a certain risk. And underwriting is a complex process that involves data, statistics, guidelines, usually provided by actuaries. And all of this work helps underwriters predict the likelihood of most risks. For example, in life insurance, or the protection insurance known in Saudi, the underwriting process involves gathering a lot of information about you. They start with an application that asks about your age, medical history, mental health, family medical history, occupation, and even hobbies. you may also be required to undergo, in certain cases, a medical check or exam. And during the exam, definitely they will take your vitals, your height, weight, definitely pulse and blood pressure. And in some cases, ECG might be required, which is the electrocardiogram, cardiogram, and it's used to assess further your health deeply, in case you were above a certain age, or if the requested coverage is of higher amount. Another example is in motor insurance. So the underwriter may evaluate your driving record as part of the process of determining whether you are eligible to be offered a policy. So if you have a poor driving record, you could be seen as a high risk customer, and the insurance company might decide not to insure you, or to insure you but to charge at a higher premium to compensate. So the essential element for insurance this might be a bit too technical, so I'm gonna just go quickly over it. But these are like important concepts in insurance that form part of the foundation of the concept of insurance. So I'll start with the utmost good faith. As we mentioned before, the insurance is a promise by the insurance company to pay you for your losses. And since it's a promise, it should include like utmost good faith between the two parties. So from the part of the insurance company, they should provide you with accurate information about the amount of compensation you're going to receive, the condition, the terms, and so on and so forth. And if they do not disclose all the information, or they mispresent some of the information, they would be liable to compensate you. Same goes from your end, or the insured end. So since you are giving them certain information about you that will help them assess the risk, they should have good faith in that information you're providing, that they are accurate and trustworthy. And in case you did not provide certain information, or you hide certain information, then maybe your claim would be void at the time of claim. Contract of indemnity, the concept is that insurance is to restore you to your previous situation, and not for you to make money out of it. Insurable interest is that you should have like financial interest in the object you are insuring. Other elements are the proximate cause, which is the direct cause that caused the loss, and it should be like among the insured events for you to be entitled for the loss. Principle of contribution, and then subrogation later on. You can read it, and you can always ask me later on if you have any question about it. So to complete the picture about the full insurance environment, we're going to talk a bit about reinsurance. And reinsurance, as we said, the actuaries and the underwriters would put certain like assumptions on the risk that might take place. So let's say they did those assumptions, and then out of nowhere, a catastrophe took place. And then this is an abnormal situation, like huge losses might be incurred. And as an insurance company on its own, it will go bankrupt if such things happen. So what they do, they refer to reinsurance. And reinsurance occurs when multiple insurance companies share risk by purchasing insurance policy from other insurers to limit their own total loss in case of a disaster. So in a way, reinsurance is the insurance for insurance company. So the relationship between insurance and reinsurance is similar to the relationship between an insured and an insurance company. Usually, reinsurance builds their portfolio by diversifying it from different geographical regions, and that's to cater for to minimize their exposure and avoid the concentration of risk. Insurance purchase reinsurance for 4 reasons mainly. As we said, to limit liability on a specified risk, to stabilize their loss experience, to protect themselves against catastrophes, and finally to increase their capacity. Because as you know, to underwrite, you should be covered by a certain amount of capital. And so the bigger your portfolio, the bigger your capital should be to cater for those risks you are associating. By doing reinsurance or by going to a reinsurance company, you are sharing part of your risk with those reinsurance company, and you'll be more solvent in this case. So going forward to today's world and the technology that disrupted everything, we're going to talk a bit about InsurTech. So InsurTech is mostly used to refer to the use of apps, wearables, big data, machine learning, and other transformative technologies to automate, improve processes across the insurance value chain. And when we talk about the value chain of insurance, we're talking about the full chain, starting with marketing and policy origination through underwriting, services, and claims, which is called as or the other after-sales services. So the insurance-specific branch of Fintech, InsurTech, is emerging as a game-changing opportunity for insurers and newcomers to innovate, improve their offering, and grow as well. And as we all know, and we all hear it, the insurance industry is a rigid insurance, and it has been the same for more than 100 years. But over the past decade, it has seen a number of exciting new innovations and new business models. Technologies offer efficiency needed to provide the service consumers demand, while enabling carriers streamline their processes and tailor and scale their product offering. But InsurTech doesn't mean only just offering products more quickly online. It means transforming offering and the customer experience. So as a background, as we said, insurance industry has remained rigid for much of the same for more than 100 years. InsurTech emerged around the year 2010 as an offshoot of the similar endeavor in banking known as Fintech. As you know, insurance is part of the financial sector, similar to today. So InsurTech is considered part of Fintech. So what's the value proposition for insurance? Insurers today have been able to slide by with incremental improvements that are taking place. But with the surge of new entrants and the amount of funding that they are securing, insurance company found that this is not enough. And what they have to do is, as we have mentioned, they need to meet the customer needs with new offering. So today's customer are expecting personalized insurance solutions. So as a customer, I expect the insurance company to talk to me in person and not just as a number or mass among the mass in the market. They should look to enhance the interaction and build trusted relationships. So insurers have to manage increasing customer expectation, provide seamless service and self-service, which is a lot of like the new generation and today's population are expecting from insurance company versus the old way of communicating and doing business. Augment existing capabilities and reach with strategic relationships. So many of today's capabilities are based, like if we say in Saudi, for example, we have all those like partnerships between various companies and government agencies, or so if we're talking about ilm and the information that they provide to their customers from companies, for example, in the case of insurance company. And if we talk about aggregators, you don't have to like go through a lengthy process now to get a quote. All you have to do is enter like a couple of information, and then there will be like an integration between the insurance company system or the aggregator system with the insurance company and with the ilm or other portals that would provide seamlessly those information for you. And you don't have to go into like the full application to fill in all kinds of information, lengthy information like we used to do. The first thing is leverage existing data and analytics to generate risk insight. So established insurers traditionally have had the advantage over prospective newcomers because they are established companies, they have the means, the resources, the experience. However, with data, as we see today, we see that new players are coming into the market and gaining quickly the market share they're looking for by using data, definitely. So insurers should utilize new approaches to underwrite risk and predict loss as well. So we're talking always about protection-based models and like the use of new technologies like sensors nowadays. In the case of telematics, as we have mentioned, they can like track the behavior of the driver while driving, and they can assess the risk on that basis rather than assess the risk of a whole pool of insured. Finally, they should enable the business with sophisticated operational capabilities, and this is mainly to enhance efficiency, speed, and transparency for the customers while conducting their going through their customer journey. So talking about customer journey, let's see how the technology or InsurTech disrupted the existing space of insurance. So customer journey in insurance has encountered a dramatic shift in the past couple of years. Although all companies had plans in place to digitalize the consumer journey, but we all know what happened with COVID has accelerated this process, and it makes it like in no time a reality. So most of today's insurance products are remarkably similar to those of a generation ago, underwritten with similar principles and sold through the same agents and brokers, mainly the same distribution channels. But this static period could be coming to an end, as we are seeing, led by the risk of the rise of usage-based insurance, the UBI, and the behavior-based insurance, the BBI policies, which we're gonna tackle a bit later. So under the customer journey, we have the traditional bulky customer journey that we used to know, so which include lack of transparency in processes such as claim approval. A claim could take like a day for you to submit it because you need to take all your documents or your paper and go to the insurance company physically. Whereas today it's like real-time update and tracking. You can apply for your claim online in no time. In like 1 minute, you have your claim already intimated with the insurance company. Previously, we used to have like limited support in submitting claims and supporting documents. You had no clue of where your application is and what is the progress on it. Today, as we said, with the integrated digital solution, they can they have like real-time updates on the status of their application. They have the ability to assess the damage and find nearby repair shop, for example, in case of car accidents. Previously, we had like limited support. As we said, claims would take like weeks and sometimes months to be settled, whereas today settlement could be, in some cases, be made within a couple of hours or days at maximum. Previously, we didn't have like online reporting. Today, we have real-time reporting and dashboard. And if we're gonna talk, we talked a bit about claim. If we wanna talk about the insuring a policy, for example, we're talking about motor insurance again. With the rise of the aggregators today, it's like very easy to log into one of the aggregators' websites or applications and just fill in a couple of information, as we said previously, and then you will have like quotation from most of the companies in the insurance market. And you can choose whatever is convenient for you. You can pay online, and then you get your insurance uploaded to whatever government portal it needs to be uploaded to, and you're done. And this is way different from the way things used to happen in the past. And this is one of the benefits of insurance, of InsurTech. So again, we're still with the comparison between the past and the current or future status of the customer journey. So much of the changes took place under the knowledge stage of the customer journey, as information used to be dependent on brochures or referrals, whereas today, with the internet, with the disruption of new technology in place, we have an ease of access to information. We have the online search engine, which can give you like all what you need to do to know while you're sitting at your home or wherever. The purchase of policy and acquisition, as we said about aggregator and how they disrupted the purchase of policies. The use of claim submission. Claims used to be a tedious process. Nowadays, it's like online being done, and you can submit all the documents you need. Even for renewal, renewal previously used to be manual and inefficient because in many cases, certain customers were not able to receive the renewal notification from insurance company, whereas now you have multi-channel to send renewal notification to the client, whether by phone, SMS, WhatsApp, any mean of communication. And even the renewal itself is automated. As soon as you send your confirmation, your policy is renewed. So let's talk about some of the trending innovation in the market and the InsurTech today. So we have the big data. This statistics has been done in the States, but it's still relevant mostly to all markets. So we're talking about big data, the machine learning. So the use of data to generate like better risk assessment in the case of insurance. We have the software as a service cloud, the cloud hosting. So you can now access your portal, your policy, use the application wherever you are, anywhere in the world. Usage-based insurance, which we talked about a bit. It's like the telematics that we're going to talk about a bit later. So for example, you can now buy insurance for your usage. Instead of, for example, insuring a car for 1 year, you can insure it for the number of mileage you would like to use it for. We have the IoT, the sensors and everything, the Internet of Things. We have digital robo-advisory, and this is the case of chatbots. So today you don't have to call a call center, for example, and wait for an available agent to answer your call. You can have like most of your queries answered by robotics and chatbots. We have gamification, peer-to-peer insurance, and peer-to-peer insurance is just to give like a brief explanation about it, is like when you have, instead of having a pool of diverse risk, nowadays certain companies, especially in the States, they have like pools of relatives, of people having like common interests. They know each other, they know the risk, so there's more transparency in what's going on, and there's less fraud. Blockchain, we all heard about blockchain and the cryptocurrencies and so on and so forth. In insurance, blockchain is mainly used in claims. There are many companies in UAE now currently working on this technology to revolutionize the claims process. And then microinsurance. Microinsurance is a new concept. Relatively, it's very famous in Egypt, for example, and in some other countries, whereby the population does not afford like high premiums for coverage, and so microinsurance is about providing cover for for small amounts or minimal amount, and definitely the premium is gonna be like small in return. So emerging business model came up with technology and InsurTech. So we saw like new business models, new players in the market, and we saw new ways or of kinds or types of insurance as well. So we've been talking about the marketplace or the aggregators, aggregation of insurance products from different providers to provide users with consumers with a choice, or consumer with a choice. So you can compare now from your home all the quotes available in the market. You can compare the benefits of each of them. You can see the suitable price for you, and then you can insure it and pay it online. Another business model is the full stack insurance, which is ideally an insurance company, but it's a new insurance company. It's a tech company that provides full insurance solution and compete with insurance providers. Another business model is the MGA, which is the managing general agent, which is the same as a full stack insurance. However, they are associated with one insurance company and they sell on her behalf. They have their independency. However, they are linked to that company. And MGA is a kind of like revolutionized business model of what we knew before as agent in Saudi Arabia, for example. Telematics is a new insurance, if I may say, solution that leverages the usual use of data to improve the provision of insurance. And so we can use now the two concepts we talked about. The two concepts are the usage-based insurance and the behavior-based insurance. So you can pay now via telematics, for example, for the a number of mileage you would like to use your car for. At the same time, you can be priced based on your behavior. So you don't have to be like, let's say, assessed as a risk profile the same way like a reckless driver is assessed, and you can benefit definitely from like rewards for your good driving. Another insurance type is parametric insurance. It insures a policyholder against the occurrence of a specific event by paying a set of amount based on the magnitude of the event rather than the magnitude of the loss like the traditional insurance do. And there are many examples in the States, in Europe as well. So for example, in the UK, there's a company that insures SMEs against floods. So what they do, they place sensors in stores, and if the flood like reach a certain level, they will immediately pay you the agreed amount of money. Usually those type of insurance are not like insuring against very high amounts of cover, but they do pay settle claim immediately. You don't have even to intimate the claim. Once the sensor will trigger an alarm or something on their system, you receive your money like within hours. And then microinsurance, which we talked about, is the creation of risk-sharing network where a group of individuals pool their premium together to insure against certain risks. And beside that, we have the evolution has touched as well the operational model of companies. So it provides them a solution to help reduce cost, increase efficiency and speed, and definitely eventually revenue. So in 2021, a US company called Level has conducted the insurance consumer survey, and they published a report, and they came up with the like main findings about the market and what is the demand in the market. So mainly they are talking about immediacy, the speed, the transparency that customers are requiring, and more personalized products and services via the usage of web and mobile apps. So we have what we call the digitally native consumer, which demand like the trends to have like digital interaction via self-service platform rather than waiting for the insurance companies or agents to provide them with the service they need or the support they are requesting. The other one is the demand for personalization. So as we said, today's consumers are demanding. So they don't want to be treated like a number among a mass. They want to tailor products for them that adapts to their needs and risk profile. Privacy, insurance companies should invest in the security and privacy of collected data to assure their consumers that their data is being properly safeguarded and safe. Web and mobile app features. So everybody is demanding now using mobile more frequently. They are demanding to have everything via their mobile. I mean, look at WhatsApp, for example. Nobody could use it previously as a business channel. Now, a lot of companies have like dedicated channels or campaign via WhatsApp. But at the same time, consumer request strong security feature. Speed and efficiency, as we talked, are important elements of the customer service today. However, still some of the population are requesting human intervention because they believe it's essential to have human interaction rather than just fully digital like means of dealing with the insurance company, especially in case of difficulties or in case of some complex tasks and so on. So what does it mean for insurance companies to go for InsurTech? With data-driven insurer can underwrite more accurately, so they can predict their losses more accurately. They can collect customer insights and behavior. They would eliminate security risk and reduce fraud cases that could take place by the aid of technology. They have better processing for claims, for example. They can assess their internal operational risks. They can deliver personalized services, and they can explore new opportunities, like in terms of new market, niche market, and new product as well. I know we're running out of time, so I'm gonna run quickly over those. This is the landscape, InsurTech landscape. This is conducted by CB Insight. It was done for the United States market, but you could see the diversification, and this is only goes for InsurTech. And so we have like for each and every branch of insurance, like health insurance, home insurance, auto insurance, you see the amount of players that are there. And we have like for individual, for small commercials or what we call SMEs, and we have a class for the B2B and commercial insurance. And we can see that there are a lot of players going on, and still many more are coming. If we compare that to the fintech landscape in KSA, those are extract from Saudi Fintech Saudi annual report for 2021. Usually it's about fintech, and if we see to the right, you can see if you go to bottom right part where insurance is, and we can see that there were only 4 players in the InsurTech domain in comparison to the previous slide where we saw the landscape in the States. And to the left side of the slide, we can see that insurance under others accounts for less than 5% of the whole fintech database. So this gives us an idea about the huge potential that we have in the MENA region and in Saudi Arabia in more in specification, and the opportunity, the potential that we have to go along and like diversify the market and revamp the market and even disturb it. So in terms of resources, I'm going to talk a bit about Tamkeen podcast. Tamkeen is the first insurance podcast in the MENA region. It gives you the opportunity to listen to top executives, experts, innovators in the insurance industry. Usually we discuss various general hot insurance topics that are on the table. Tamkeen vision is to spread insurance awareness and knowledge and promote innovation and innovative ideas. So Tamkeen had only one season so far, and it has made it to the top 50 podcasts under the business category in KSA and UAE. And soon we're gonna launch season 2. So stay tuned. You can find the below are the links for Tamkeen on the major platforms: Apple Podcasts, Google Podcasts, and other forms. And you can follow Tamkeen as well on LinkedIn via the following link. Other resources are Fintech Saudi. Definitely, they have reports, publications, and they have events like this one where you can benefit and widen your knowledge about insurance. You have the General Arab Insurance Federation, the GAFE. They do have publications, events. They have a weekly newsletter that you can subscribe to via gafe.org to know about the latest news in the market. You have the website for the Saudi Central Bank, SAMA, where you can see all the figures, SAMA news, and the reports as well. There are other sites like the Society of Actuaries. They publish some papers and research. You have the Chartered Institute, the same, and the Insurance Information Institute. I mean, there are many others. I mean, I mentioned some in the reference that I used to come up with this presentation. Most of the big consultants, especially the big four like EY, PwC, KPMG, they always have their publications, and the other sites as well. And I'll be always available for any questions. You can contact me on my LinkedIn profile, and I can support you at any time. So thank you very much. And I think we're having a Q&A session now.
Thanks, Rami, for a really comprehensive overview of insurance and InsurTech. I think by the end of this session, we should all be insurance experts with the amount of content and information which Rami has provided. So thank you very much again. We do have quite a few questions, and I appreciate we're short on time. So I'm just going to run through a few of the ones which we've got reoccurring from the Q&A. So one is related to technology, and particularly the question was around how can IoT be used in insurance? And there was another question which you can answer as well, which is how can open banking be used in insurance? If you could address that area, please.
Yes, sure. So talking about IoT, I mean, we talked a bit about the telematics insurance, which uses the IoT in various forms to provide like usage-based insurance, which is more convenient to customers, more effective in terms of cost and affordability and convenience as well. And the behavior-based technology, where you will be rewarded, for example, based on your behavior, whether in telematics, as we said, in motor insurance, or even like with wearables and good practices and habits in health insurance, and as well in other places as well. So the IoT is very, I mean, IoT was behind all this revolution that took place, whether in the fintech in general or in the insurance in specific. And there are many other places where IoT can provide further solution, and it's still under progress. So it's a long journey, a long way to go. The second part of the question,
open banking.
Please again.
Open banking. How can open
banking
impact insurance?
For the time being, we're still looking for open banking to see where it will go. Definitely, open banking is about like provide information to third-party providers, and definitely we have something similar in insurance, which is the embedded insurance, whereby the insurance can form part of the customer journey and for any customer journey in any place. I think there are a lot to see and to wait for open banking and later on for the open finance in general, which part of it is insurance. So we'll wait to see.
And thank you for that, Rami. And I guess on the flip side, right, if we're using more technology, that opens up insurance companies to more technology risks, things such as cybersecurity, data hacking. So what are you seeing to mitigate this side of things? Because I appreciate more reliance on technology leads to more technology-driven risks for insurance companies as well.
Sure, definitely. I think you have mentioned quite an important point, Sagar. Which is cybersecurity. I mean, with the rise of new risk, new opportunities, they are like new needs as well. And as you said, with the rise of insurance and what's going on, cybersecurity became like of most importance in this domain. And the risk, cybersecurity is one of the emerging risks that we're having, and it's still evolving in the insurance. Definitely, there are certain countermeasures that we need to take. I mean, there are a lot of new insurance products coming to, for example, if you look at the drones, now we have a special insurance for drones that was recently licensed by SAMA. So with new innovation, we have new opportunities, but there are risks associated that insurance sees as an opportunity to widen and innovate.
Excellent. And I guess a final question just related to that is, where do you see the opportunities for InsurTech in the kingdom, right? We talked about a lot of the business models which we're seeing around the world. Where do you see the future for insurance and InsurTech in the kingdom? And what's stopping us with InsurTech innovation in the kingdom?
I think we're still at the beginning of a long journey when it comes to InsurTech in the kingdom. I mean, we talked about the aggregator in the kingdom. However, the aggregation model is just like one aspect of InsurTech, which is limited or restricted to the distribution channels. I mean, we do have a lot. If we see, as we saw the slide about the landscape in the States or in Europe as well, we see a lot of areas of innovation in the domain of underwriting, for example, in the domain of like customer service as well, in the claim settlement, the use of blockchain, and all of these are still intact in the Saudi insurance market. I think we have a lot of opportunities when it comes to like the usage-based insurance, the telematics. It's still very minimal in the kingdom. The health insurance and other domains. I mean, we talked about parametric insurance. There's no parametric insurance in this kingdom yet. We talk about the NGAs. There's no NGA in the kingdom. So we have the opportunity to bring existing models from outside more advanced markets, but I think we do have the capability in the region and in the kingdom to innovate as well and come up with a new business model or new ideas using IoT and using big data and blockchain and all these trending technology available.
No, I fully agree with you, Rami. From Fintech Saudi's perspective, I think we're seeing a lot of opportunities in InsurTech. It's an area where we see a lot of potential, a lot of growth. And anyone who's listening who wants to get involved in InsurTech, then do, of course, get in touch with us at Fintech Saudi, because we'd love to help you with whatever InsurTech solutions you want to develop. As Rami mentioned, we have a lot of resources. You've got Rami's podcast. We've got a report on InsurTech on our resources page, which we'll share in the Telegram group. So there's a lot of resources for anybody who wants to build any InsurTech solutions in the kingdom. On that note, Rami, thank you very much for getting up early in LA, for dealing with thunderstorms, for dealing with the cold, and for being with us here today. I really appreciate your time and efforts you put in today. And everyone else, thank you very much again for joining for week 6 of the Fintech Summer Sessions. Next week, we have week 7. There are only 10 weeks in total. So week 7 out of week 10, we have next week. Next week is going to be about capital markets. So we have a great presenter joining us from Accenture, who's going to be telling you everything to do with capital markets. So that's definitely not a session to miss. As I mentioned, we do have the internship workshop starting in about half an hour. So you're more than welcome to join that. And other than that, we look forward to seeing you next week. Thank you very much for joining. Thanks again, Rami.
No, thank you. Thank you, everyone. Thank you for your effort, Sagar and the team.
Take care, everyone. Have a good evening.
Bye.